Will Stringer, today's guest, is the co-founder and CEO of Chisos Capital, an alternative investment company that invests at the earliest stages of business ideation utilizing a convertible income share agreement. Having raised capital via crowdfunding, he encourages its use. Will share insights about his work and his superpower. I'm your host, Devin Thorpe. Welcome to the Superpowers for Good show. Will, thank you so much for joining me for this conversation. It's just a thrill to connect with you.
Thanks for having me. I appreciate it.
Well, at SuperCrowd 22, you were on the program, and so this provided a context for me to get to know you a little bit. And the primary thing I learned is there's so much more I want to get to know about you and your incredible work. So I appreciate you taking the time to come on the show. Tell us about Chisos.
Sure. Yeah. So Chisos is an alternative capital provider. We like to say that we invest directly in people. Often that's day one capital. So we're investing pre-traction, pre-revenue, alongside friends and family, or instead of friends and family, using our convertible income share agreement terms. Really what that means is we're investing up to $50,000 on our convertible income share agreement, which is made up of two instruments. One is an income share agreement, similar to what you would see in the education space. The other is a safe equity in a person's business. Both of those really combine to allow us to invest in day one founders when it's super early. And at a super high level, that's what we do at Chisos, is provide that really early capital.
That is a fascinating model, because I don't know of anyone else doing exactly that. But it seems to me that then that also fits in well to equity crowdfunding strategies later on, and you've demonstrated in the past at least some interest in backing founders who aren't traditionally backed. Isn't that right?
Yeah, it's another kind of tool in the tool chest of founders today as they're raising capital for their company. So one, we actually did an equity crowdfunding campaign ourselves last summer. So we raised a little bit of operating capital on WeFunder to grow our team, develop our software, really build out our business, which is investing in founders. So we had some experience there with the crowdfunding. A lot of our portfolio founders have also run crowdfunding campaigns. So Chisos can come in, we can be an early check. They can then raise some capital from their community. And that can be kind of the earliest checks that get a company off the ground. Those founders can then go on to either bootstrap, try and reach profitability, or if they want to go the VC route, hopefully they are at a point where they can raise a pre-seed round or a seed round from VCs. What we have found as we've been deploying capital is that alternative capital options are really sought out for a number of founders that, like you said, maybe don't run in the circles of traditional VC in the proverbial Silicon Valley, or that have spun out from Harvard or Google. And our current portfolio stands at about a little over 65% of our portfolio are investments in underrepresented founders. So again, that kind of speaks to the use case of our early capital for those that may not have that early network where they can raise the first 100 or 200K from friends, family, and colleagues. So it is a benefit of just structuring things differently and being able to invest differently than, say, a traditional venture capital or angel.
It really is an exciting development, right? Really to think about this, because there's so many founders who have ideas, and the first stumbling block, that what shuts them down is, I need 10,000, 20,000, 50,000 to figure this out, to make it into something, and I have no idea how to get that money, where to get that money. I don't have family, friends. I don't have a bank account with that. And so that idea dies
Hmm.
almost instantaneously. And what you're doing is you're creating, if nothing else, a path for success that an entrepreneur can have in his mind or her mind, their mind, right? To say, oh, there is a path, there is a way, there is a source. I can go to Chisos. And
Hmm.
even if they don't get money from you, it's forced them to really think through this in a serious way. And suddenly this thing has a life, right? And they say, well, maybe I could crowdfund this. Maybe I could do X. Maybe, and so it's really a valuable thing. Tell us a little bit about the application and screening process. How do people find you and access this money?
Sure. So we've got a couple ways that we get the word out about what we do. We do a lot of organic material, things like podcasts, webinars, social media, etc. Um, we also have a partnership program where we go out and we talk with the accelerators, the incubators, the VCs across the US, tell them what we do, and tell them, hey, you see a ton of early stage deal flow, send them over to Chisos. We may be able to provide that early stage capital. Maybe we help them level up, get to some traction or some revenue, and then send them back to you to raise their pre-seed or seed round. We have an open online application, so anyone can go on and apply. We have a big orange button on our website that takes you to the application process. And the first two steps are automated. So the first one's really asking for, just your LinkedIn. We do ask for self-reporting on some personal financial information because during our underwriting process, we're looking at three buckets of info. One is financial information on the founder. Two is more psychographic information, such as grit, hustle, ambition, leadership, coachability. And then third is we are looking at the business at a very high level. What we've tried to do is take the idea of that first check that typically comes in for a founder. Usually, or for a lot of people, it's personal bank account or friends and family. And that money is coming in as belief capital. Typically, there's nothing to show on the business. And so those people are literally investing in you as a person because they know you or trust you and believe that you can actually possibly do something, possibly build something. People that don't know you typically aren't going to invest in your business at that stage unless you have some revenue or unless you really have some other type of message that kind of signals that you're lower risk and maybe can build a big company. Maybe you're a second or third time founder or something like that. What we've tried to do is shortcut that. Because we're investing directly in the individual, we're saying, all right, we're looking at your future earning potential. And often that's informed by your previous earnings. And so we're looking at, all right, where were you working before? What were you doing before? What was your income level before? Where do you have skills? Because when we're investing in you day one, yes, we think or we want the company to be viable. We want you to build a giant company and we'll have equity in that company and everyone will be happy. But the reason we're able to provide that day one capital is because of our income share agreement. And our income share agreement is really looking at your future earning potential as an individual. So we're saying, all right, in a worst case scenario, we invest our $50,000, your company fails the very next day. Well, the reason we're able to invest so early and kind of that substitute belief for spark capital is because we're investing in you directly. And so after or if your company fails on day two, we're asking, all right, what are you doing next? Can we help you go back and get a job? Can we help you start your next company? Because that income share agreement is an investment in you personally. And so we want you to succeed. We want you to earn income because that instrument is how we're going to get paid back over time. But a little bit of a difference in kind of how that instrument works is there's a salary floor, there's a payment cap. And so what happens is you are making payments on the income share agreement when you're earning income, but only when you're earning income over a certain threshold. So while you're building your business, if you're paying yourself a very low salary or no salary, there are no payments due. So it's a very flexible instrument, unlike going out and taking out a credit card or a loan or a traditional loan or anything like that.
Yeah. That is a fascinating approach. And you've thought through a lot of the issues to try to make this really a fair structure that recognizes the reality an entrepreneur faces, but at the same time provides a path for you to get repaid, even in a failure situation. So it makes this a real win-win. Um, let's talk a little bit about.
Just quickly, a big reason we've structured it like that is to try and move capital from traditional financial sources into that day one stage. So large pools of capital, they're investing in less riskier things, real estate, private equity, later stage venture. And so I was trying to figure out, all right, how do you mobilize that capital into the earliest, riskiest stages where founders really need not that much capital to get started? And that's where I used a little bit of my own background, which we may go into, but I used to work at a family office, more conservative family office, investing in real estate, oil and gas, that kind of thing. And so as I designed our convertible income share agreement, the thinking was, okay, how do you protect the downside for the investor? How do you maybe provide some cash flow? But then also, how do you give the investor exposure to equity upside should the founder build the next Facebook or what have you? And so that was the idea, and really trying to mobilize more capital to the earliest stages of entrepreneurship, truly pre-seed or pre-seed.
Yeah, well, it's really unique model. I don't know of anybody else doing exactly this, and so it's exciting to see what you're doing and um, accomplishing. Tell us a little bit, if you can, about some of your early wins. I realize that this is still somewhat new, but I imagine you can see progress with some of your clients. Maybe you can brag a little bit about them.
Sure, yeah. To date, we've got 34, well, I guess 35. Checking my email, looks like we have a new signed deal. 35 deals to date. We've deployed about 1.2 or 1.3 million so far. We've got 5 companies that have gone on to raise additional rounds of capital. And then we have collected a little over 150,000 in ISA payments over the past 2 years, just founders that have jobs, are paying themselves salary. So the model's working. It's going slower than I like. Doing anything new and novel on the financial side often takes time to build out the track record so that people can invest in you based on the actual numbers and the returns rather than just based on your theory and Excel model. I'd say some big wins. We just put out a blog post on our very, very first investment that we made. A founder named Tania out of New York. Company is Renewable. They have a fertilizer, a kind of recycled product fertilizer that is used in soilless farms. So hydroponic farms or soilless farms. They've gone on to raise, over $1 million in additional capital. And they did that last year. They put out a press release on it. They're chugging forward. They're doing well. They're moving pilot contracts over to revenue. And so, that was our very first investment. I think we got super lucky. That was kind of May of 2020. And, we connected with Tania over Zebras Unite, actually, found a group well. And so that's been great to work with her and we do what we can. She is going to succeed on her own no matter what. We do what we can to try and make some other investor introductions and, provide feedback where we can. But she's just a rock star and is really going to succeed no matter what. And we have a number of those founders where they will do everything they can to be successful and bring their product to market. I obviously won't go into a bunch of them or most of them, but we're excited about the portfolio and what it's shaping up to look like.
Yeah, that is wonderful. That is wonderful. Will, as you think about the successes you've had in your career, and you, for a young guy, you've done a lot, including especially Chisos, which is such a novel approach to capitalizing entrepreneurship. I'm excited about that. But as you think about your successes, What do you see as your superpower that's enabled all this success?
Yeah, I think curiosity is a little bit of one, and then just maybe a slightly unhealthy desire to succeed in quote unquote the game of life. Obviously there's a lot more that goes into life than building a business and being successful at building a business. But I think in my career right now, that's really what I'm focused on, is building something unique and making it big and kind of taking it mainstream. I think throughout my career, I've always been curious to dig into different topics. So, I started my career in banking. I went to the University of Texas in Austin. So, no pun intended, but there's a really strong pipeline of jobs out to Houston to start in the oil and gas industry. And so I started oil and gas banking, learned a lot about that industry, then jumped over to a family office where I was exposed to really everything in the investment world, late stage, growth stage, earlier stage, technology, real estate, et cetera, public, private. Really started gravitating towards the technology side of things in the earlier stage venture when I was at the family office, even though that family office didn't do a lot in the space. Things like crypto. I started digging into crypto, 2015 and 16, just really curious about, hey, what is this new thing? What is this new toy that's being developed? And learning about it and figuring out, okay, where is this going to go? And I think that's ultimately what drove me to start working with founders, investing in founders, because they're usually building new cool things that are solving problems, problems of all sizes. And so for me, really digging in and being curious about the person, being curious about what problem they're solving is, I think, what's going to lead to our success at Chisos, and really being able to identify high potential founders, strong founders, building interesting businesses that are solving real problems. So yeah, I'd say curiosity is a big piece of that, kind of driving forward.
Yeah. As you think about uh, curiosity and your experiences over the past decade or so, can you think of a specific instance where you say, oh, yeah, I really saw my natural curiosity pay off in this situation? Can you think of one of those to share?
I mean, the one that immediately comes to mind is just crypto. I was working at the family office. I was doing diligence on a company that was building, kind of a blockchain tool. And so I just fell down that rabbit hole and just kept digging and digging and digging. Very deep rabbit hole. The industry was just evolving like crazy. And so, at that point, it hadn't exploded yet in 2015 and 16. So, that was one specific example where I stumbled on it and I was like, hey, this is interesting. Like, this seems like it's going to go somewhere. And, whatever, 5, 6, 7 years later, it has gone somewhere. Lots of ups and downs, but it's gone somewhere. So that's one. And then two is Chisos in general. The interest and curiosity to kind of design something that worked for founders, but also worked for investors in order to try and mobilize that capital. That's what we did when we built the convertible income share agreement, and I started and started building Chisos. So that alone is kind of a accomplishment I'm proud of today, of where we are and the capital that we've provided to some early founders.
Yeah, that's a great example. Great example. As you think about how you've used curiosity as a superpower, how would you coach someone else to develop that ability? Now, obviously, some of that is natural, right? Maybe innate, but at the same time, there are things, specific things that you can probably think about that you've done, and so and maybe you've even coached people in the past on how to develop their curiosity. What would you give as advice?
My two biggest things have always been reading and travel. And when I say travel, it's like travel outside your comfort zone. If you're going to, I won't name a place, but if you're going to just a standard, resort and you're not really getting out and seeing a new culture or feeling a little bit uncomfortable, then I would say that's a different kind of travel. But travel and get outside your comfort zone. So I think, I was fortunate enough and was able to travel a little bit when I was younger. That really helped me see different cultures, see how different people operate, and then realize that, oh yeah, the way I grew up is not the only way that people operate. Like, people do things very differently. And I think seeing that always led me to kind of dig deeper and understand why are some cultures different? What is the background there? And then I think on top of that, reading is another way to just get exposure to new ideas. And so reading broadly across different topics and just kind of learning new and interesting things, the diving in and reading books about quantum physics or quantum mechanics, like I don't pretend to understand that stuff, but as I read books about it and kind of try and learn about it, like, it's just fascinating how much I don't know, or people in general don't know. And there's so much white space to explore. And to me, that's just mentally stimulating to kind of learn new things. And so I think a lot of times, I'll tell people or advise people, like, look, if you can travel in any way, get outside your comfort zone, that's great to kind of help break your mold. Read books that are on topics that you know nothing about. That'll kind of fire your brain and get you thinking. And then read dissenting opinions as well. So, you may have one point of view. Go read the other point of view and read it with an open mind. Don't read it and immediately get mad or get closed off. Like, read it with an open mind and really try and understand, why is this person saying the things that they're saying? Like, what are their incentives? Like, there's a lot of stuff that gets written that, yes, their incentive is to, make the other side mad or make people mad. But a lot of times people are coming from a genuine space and they're just writing something that you don't agree with. And so maybe try and put yourself in their shoes and understand where they're coming from. And you may still totally disagree. But I think just understanding the other side or other points of view can just help you be more curious and then help you be a little bit more open-minded, which you really do need an open mind when you're building something or building a company, because you never know which pathway is going to succeed or ultimately help you find product market fit in the early days.
Yeah, well, that's a profound insight, and I really appreciate you sharing some of that advice for triggering and fostering curiosity. I certainly don't have your superpower of curiosity, but I can confirm everything you've said, right? That reading and traveling, especially, are really powerful tools for fostering that curiosity. So thank you for sharing. Will, I'm so grateful that you take the time to do this conversation today, and really appreciate you being here. Before we wrap up, would you take just a minute and tell people how they can learn more about Chisos? I want to make sure that people who are interested in investing in you and your companies know how to follow up. Those who are interested in accessing capital know how to follow up. Those who just want to cheer you on and follow your story know how to follow you. Please take a minute and make sure all those folks know what to do.
Sure. Yeah, we're pretty easy to find. Our website is chisos.io, chisos.io. To apply for investment, there's a big orange button on our website. Pretty easy to start that application. We are raising our fund too, 506C exemption. So we can do general solicitation. Again, there's a less big button on our website that says invest here. We have a self-serve portal set up to go check out our docs and our deck and everything. So you can invest there. We're on Twitter, Chisos Capital. We're on LinkedIn. I try and post personally on LinkedIn LinkedIn and Twitter. My Twitter is WD Stringer. We're pretty easy to find. We've got an amazing marketing lead on our team who's done a great job of SEO. So if you search Chisos on Google, we're actually one of the first that pops up, sometimes ahead of the Big Bend National Park that it's named after.
That's fantastic. Well, again, thank you, Will, for being here today. We wish you every success in helping to fund non-traditional entrepreneurs and helping them to succeed in things that they perhaps could only have dreamed of without your help.
Yeah, thanks so much for having me on. I really enjoyed it.
All righty, let's do some good. Thank you for tuning in to the Superpowers for Good show. Twice each week, we host changemakers who share their impact, insights, and superpowers. Don't miss another episode. Subscribe today at superpowersforgood.com. That's superpowers 4good.com. Be super empowered. Get your copy of the book, Superpowers for Good, as an ebook, audiobook, paperback, or hardcover edition via your favorite online retailer. Interested in having me speak to your company, organization, or association? Visit devinthorpe.com. Then let's talk. Now, keep using your superpowers for good. Together, we can reverse climate change, improve global health, and eradicate poverty.